talking about Nifty Bank, yes, it is seeing an uptick of about 100 odd points. Remember, yesterday you had Nifty Bank that scaled past 51,900 pretty briefly in the trading session. Talking about the advanced decline ratio tilted in the favor of the gainers as we speak. On talking about the gainers, you have Hindalco, BPCL, RIL, Kotak Mahindra Bank among the top gainers, while on the losing end, it is Sun Pharma, M&M, Titan, Bajaj Finance that are taking it a bit easy in trade. And sectoral wise, if you see, is Pharma IT in the negative and metals and realty that are holding the fort. So that's the way how the markets are looking like at this point in time, Shrishti. But yes, one needs to actually decode what exactly happened in Nifty Bank yesterday, isn't it?
Well, certainly, Cheryl. So for that, let's go across to Ansh to get a detailed technical analysis on Nifty Bank's stellar move that we have seen yesterday. So let's go across to Ansh then. Ansh, take it away.
Right, so Nifty Bank touched that 51,900 mark for the very first time in the previous session, where HDFC Bank and ICICI Bank actually contributed the most, almost 700 points to index up move. Today, the index is trading within its previous range only, but in the previous session, we saw overall index stocks adding over 77,000 crore of market cap in one session itself, which is a very positive sign. If we talk about future market, the Nifty June future market was down by 2%, indicating short covering, which was a positive sign yesterday. Today we are seeing almost flat, indicating a neutral stance. In same future market, we saw strong long build up in Nifty banking stocks as well, where Axis Bank, IndusInd Bank, ICICI Bank and Kotak Bank, we saw long build up of a 5 to 16% range, which is also a very strong bullish sign coming here. So everything looks positive on data front. But if we switch on charts, then the picture is a bit different. Index seems to be forming an upward sloping channel, which has been intact since start of Feb. And historically, we have seen 7 corrections from this resistance of the channel. And currently, Nifty Bank is trading around this channel resistance only, which keeps the buyers a bit cautious here.
Thank you so much for that, Ansh, and giving us those technical analysis and the details. We will delve in further on that particular front with Kush. But let's get across to Gaurav to exactly understand what is Macquarie saying about the BFSI space. I believe, Gaurav, Macquarie has come out with a very big note. In fact, not only in the banks, but the entire space as a whole. But what are they pinpointing? What is the most crucial element in that note that they've come out with?
Well, yes, there is an interesting note coming up from Macquarie on the BFSI segment, where they have actually upgraded a few companies, specifically when we talk about banks. So they have upgraded rating as well as target price for Kotak Mahindra Bank, City Union Bank, Bandhan Bank, and even in the life insurance segment, they have upgraded the target price for SBI Life. Apart from that, they have also downgraded a few companies, specifically if we have to name a few in terms of NBFCs. We have got Bajaj Finance, we have got Chola Finance, M&M Finance, where they have actually downgraded the rating, and at the same time they have cut the target price as well. For SBI Bank specifically, they have downgraded the rating to underperform, but now increased the target price to 665 rupees. What they believe is that private sector banks are actually in a shape right now for its compounding story coming ahead, and they are expecting ROA to remain healthy for private sector banks. ROE may remain somewhere around 16 to 18% going ahead, and lastly, they are also at an attractive valuation. On the other hand, if you look at NBFCs and insurance segment, there are some regulatory headwinds that are still there. There are declining fundamentals as per Macquarie. If we talk about PSU banks, they are expecting ROEs to go down because of the normalization of the credit cost from here on. Additionally, ECL risk is there in terms of PSU banks, which is not factored in the earnings yet. Apart from that, when we talk about life insurance, now they're expecting VNB growth to remain subdued, and at the same time, we may also see falling margins. For NBFCs, they do not see any kind of trigger or any kind of advantage when we talk about the interest rate cut cycle, and that is why they are being a little bearish on this. Lastly, they have also given an idea on pairs trading. So when we talk about banking, they have given an idea in pairs trading in terms of long HDFC Bank and short SBI. When we talk about NBFCs, they are long on Shriram Finance and short on Bajaj Finance. And lastly, they are long on SBI Life while going short on ICICI Pru in the insurance segment. Lastly, they also have top picks. When we talk about banks, they have Axis Bank, IndusInd Bank and HDFC Bank as their top picks, and in insurance segment they only have SBI Life as a top pick. So definitely an interesting note coming up from Macquarie on the BFSI segment. So definitely watching out on all these companies and how they will perform in coming days in the market.
So much, Gaurav, for highlighting what's in focus on Macquarie's list. A lot of these counters there, but the big question is that will Nifty Bank outperform Nifty going ahead this year. Now, Nikunj Dalmia, editor-in-chief of ET Now, and ET Now Swadesh is here to take on the recent rally that we have seen in the Nifty Bank yesterday. So let's go across and listen into his take.
If you look at the Bank Nifty in last 1 year or last 2 years has actually underperformed the Nifty. Let's establish that. The YTD change for the Bank Nifty followed by the YTD change in the Nifty, and that's where you actually would see a big difference. So the underperformance in the Bank Nifty, courtesy underperformance in HDFC Bank and what's happened to, let's say, other private banks has been quite stark, but now that really seems to be evening out. And I expect that in the near term, given that yesterday's price action was dominated by good old HDFC Bank, which is like a large cap stock with the highest weightage in the Nifty, highest weightage on the Bank Nifty. It has gone into hibernation first because of merger and then because of what happened in terms of the post number communication. I think if that is making a comeback, then this outperformance in Bank Nifty, I think, may just be more real, and the outperformance may just be here to stay. Let's look at that data. Is that data coming up? There you go. This is the Nifty Bank this year, and this is after adding yesterday's rally. 6.5% higher for the Bank Nifty, or Nifty Bank, if you call it. But the Nifty is up 8%. So this outperformance in Nifty, I think now may just get neutralized because Bank Nifty has a very great scope. Then the next point is that which way would you lean, PSU versus private? And I think time to lean towards PSUs, time to lead away from PSUs and towards private banks, I think is there now. A, private banks are cheap. B, they have not participated. 3, if flows come back, it is highly unlikely that they will come back into PSU banks. While PSU banks in the near term, they may move in line with the market action, but sheer outperformance in the near term because of burst of liquidity, I think, would be with private banks. So if you're looking for, let's say, a monsoon trade, summer is over officially, monsoon trade, I think the monsoon trade would be large private banks.
So that's the editor's take from Nikunj on the banking space and which side of the fence everyone is leaning on to. But let's ask our experts of what their opinion is on the entire financial space, especially the private sector banks. We have Kush Bohra who's joining us on the technicals this morning, and on the fundamentals we have Vivek Karwa. Very good morning to you, Vivek, as well as Kush. Vivek, let me come first to you. We have a lot of experts, also including Nikunj Dalmia, who's of the belief that now you will have the tilt towards the private sector bank, given the fact that they have underperformed for so long. And Macquarie is also of the belief that now everything is coming together for the space. So going ahead, hopefully private sector banks will outperform. Is that what you believe as well?
Kush, first of all, I will take this credit myself. Before Macquarie, before anybody else talking, I've been always bullish on BFSI sector. If you just rewind any of the shows, and I was always telling that as a contrarian, I am very bullish on BFSI, and when that starts moving, it is going to give you.
I think Vivek, not only you, even Kush will jump into this, and he'll also be of the view that yes, even I've also been thumping the table and saying that go buy a private sector bank. At least HDFC Bank has been a consensus call, isn't it, Vivek?
Good. I'm happy that both the Marwaris on the same side. So see, I think this rally has just started. And if you look at overall market has really done very, very well. But if you look at particularly Bank Nifty or even BankX for that matter, I have been bullish because firstly, if you look at the valuations, in fact, I had posted some analysis on the Facebook and other social media as well, that the valuation of BankX and Nifty Bank is below, even today, below what it was in May 2020. So we are still pre-COVID levels, trading below those levels. So 3 years have passed. In fact, almost 4 years have passed. And all the earnings, all the good things in the sense the NPA issue, which was a major factor in all entire industry, particularly banks, that is past us now. So going forward, if something has to happen, these banks are going to get more stronger. That is one thing. And even the interest rate cycle, we all know that it has peaked out. It is not going to increase from here. Yeah, it might take time to decrease, but it has already peaked out. So everything is positive. And as a disclosure, I have been making my clients invest in banks and even bank funds, mutual funds also, which are into banking and financial services funds. So all those funds are already giving good returns. And
coming back to you, you were making a point out there. Please go on and continue.
Yeah, to sum it up, I think that there should be immediate rally of at least 3,000 more points on Nifty Bank. So be ready for it. And this is just the beginning. We are still at below COVID levels, so things have to be very good going forward.
3,000 points is what you said for Nifty Bank up move. Kush, you're the technical analyst. No doubt, I know Vivek likes to call himself as the Techno Funda guest. But coming back to you, Kush, what's the chart telling you for the Nifty Bank? Are you also seeing that 3,000 point rally coming for the Nifty Bank and especially private sector banks? Do you think they will be able to maintain this momentum and sustain the momentum going ahead?
Hi, Cheryl. Hi, Vivek. Hello, Srishti. Well, I wouldn't really mind Vivek taking up some of my load as well. So, Techno Funda, please be my guest. We could use both the views when it comes to all the queries that we've been taking. I think the last time we took about 34 of them. I want to know what's the record for number of queries that we've taken on the show. Also, yes, you are right. Like Vivek, I am perhaps going to blow my own trumpet and say HDFC Bank 1700 target. I think for the last 6-7 months, on every query that we've received, has been my view. I know we're still some distance away from 1700, 40 points only, but I think there's still some time left in this year end as well. So yes, that's how markets reward you. Let me just give you a quick statistic. If I take 1 year, 12 months rolling from here on, Nifty is up 25%, Bank Nifty is up only 17%. PSU index is up 83%, while the private bank index is up 15% only, which means there is a stellar move that still needs to come in from some of these names, and we know they've underperformed for a very long time, right? And this is how markets reward you. You have to be patient. Perhaps the 10 years worth of returns is perhaps made in less than a month's time, and you never know which that month is, but you still have to be invested for those 10 years to get that 1 month kind of return. So that is exactly the kind of move that we saw in HDFC. Everyone who's been complaining perhaps is seeing some smile on their faces, with the kind of move that we saw yesterday. Is this the end? Not even close. I think, there is still a long way to go. I'll be a little cautious only in terms of the kind of momentum, that we've seen yesterday. It coincided with the expiry and hence a bit of a caution. On the whole, the trajectory is north. Also, let me just add to the number that Vivek's already mentioned. If you see the dip, 48,000 was a resistance level. We spent some time there before moving higher, and then we dipped all the way to 44,000. Now, if you take the technical perspective, then the magnitude of the rise should actually be equal to the magnitude of the jump as well. So about 4,000, 4,500 odd points. I think 500, 53,000 is fairly reasonable number on the Bank Nifty. And even despite the kind of move that we saw yesterday, the indicators are not really suggesting overheating. The PCR is not suggesting any kind of overbought territories, which means there is still an upside. But I would like to also allude to what Ansh said at the start, which is, there is a rising channel that the Nifty and the Bank Nifty have respected for the most part of this year. That was a beautiful analysis by Ansh, by the way. We've just gone past that. Now, can we sustain over that? For sure. But with the kind of move that we've seen, we might see some pullback, and buy on dip still continues. My picks in this space from the private names, HDFC Bank and Axis Bank seems to be turning a corner. So someone would want to keep that on their radar. Also, we've recommended Axis Bank as a part of our advisory service. From the PSU space, SBI mainly from a capital protection perspective. But if someone wants to play momentum, City Union Bank is the way to go about it. And Jio Financial. This stock is consolidating, testing a lot of patience for the last month and a half. But I think this is a base formation. You could very well see levels of 390 and 410 on this one in the coming 3 to 6 months time. So when the stock is consolidating, it's a good time to accumulate. So there you go, Nifty, a Bank Nifty view, and a few picks from the financial services space.
All right, so that's the full coverage on the banking space. What's happening? What are the technicals saying? What is the brokerage report? And what our experts are also saying. So that was all about what's happening in the financial space. But with this,
if you like this video, then like, share and subscribe to ET Now.